Good morning, everyone. Good morning, good afternoon, good evening, or good night, depending on where you are in the world. Again, welcome everyone. I have a special guest here to celebrate and to accommodate the historic launch of the Ethereum ETFs that just happened about a week ago now. So, Michael, he's part of our capital markets team. It's a delight and it's a joy to have you with us. He's going to talk more about the capital market part of the conversation. And with that in mind, let's get into it right away. As I hope some of you are aware, we've just had the second watershed moment of the industry this year. What a year 2024 has been, honestly. For anyone who's not aware, the Ethereum ETF spot in the US was finally approved by the SEC to begin trading. So, yeah, this has really been a watershed moment. This has been really quite different from the Bitcoin ETF launch for one main reason. With the Bitcoin launch, it was a matter of if, not a matter of when. There was a lot of back and forth. There was a lot of uncertainty whether this launch is actually going to happen or not. Whereas with the Ethereum ETFs, it was more so, when is this going to happen? So I think we just need to be mindful of this context before we become too critical of how the launch has been so far. But before I give more context, Michael, how did you see the launch play out so far from your perspective in terms of inflows?
Yeah, appreciate the introduction, and it's great to be here and joining you guys on the call. I think we're extremely encouraged by everything that we've seen so far. I think this launch was extremely smooth across the board. Obviously, the net outflows I think were somewhat expected, but yeah, I'm very encouraged by what we've seen so far, and looking forward to the continuing momentum that we have here.
You want to give some context about some of the data that we see here, how Ethereum performed essentially in terms of inflows versus Bitcoin?
Sure. Yeah, absolutely. I think the big thing to highlight here is that these ETFs are working as intended. Obviously, with the conversion of one of the larger close-end funds, we've seen redemptions come. But I think this is similar to what we saw with the Bitcoin ETFs. Obviously, we saw a first day of quite strong trading that led to inflows across the board on a net basis, followed by a few days of net outflows. But I think still very encouraged by what we're seeing and the continued growth of this asset class.
And yeah, as Michael just said, I think the emphasis here really has been on the conversion of one of the funds that has been trading at a discount for a really long time. It meant that a lot of users were not able to really exit their positions. So this has been something in in the making for years, really. But if we take the outflows out of the equation, then we can actually see that the ETF launch was somewhere from 25 to 35% of Bitcoin's launch, which actually exceeded our expectations because most people had a conservative estimate that it would roam somewhere from 10 to 20%. So this is really a sight to observe and to appreciate. And most importantly, there's a lot of net new demand for ETH. This is really something that we should not forget about. And we're going to talk more and more about what this means for the broader industry. But it's important to not be dismayed by the amount of inflows that we've seen. And actually, if anything, if we are to compare GBTC's outflows compared with the ETH trusts that were with ETH outflows, we can actually expect the setting pressure that is coming out of this to get exhausted much earlier than what GBTC did, which took almost, I think, 100 to 130 days. So this is all really good and encouraging to see. Should we go to the next slide, Lena? Okay, so that was in terms of inflows, Michael. What did we see in terms of AUM?
Yeah, I think we saw almost identical to what we saw in the Bitcoin launch was that AUM across the board for all the issuers in aggregate dropped by about 7%. I think this was expected. This is due to the outflows as well as a bit of price depreciation, but it's actually eerily similar to what we saw in the Bitcoin launch. So I don't think anyone should be discouraged by that. And I think this chart here shows the momentum didn't start to really pick up in terms of asset growth until probably around the 15-day mark for the Bitcoin ETFs.
Amazing. Yeah, it's an encouraging sight to be experiencing and living through. What about the volume? They all echo the same message, but again, just for anyone who's not aware, I think it's important to double down on some of the other relevant or interesting data points. So what did you see with regards to volume?
Yeah, I think this is one of the most encouraging points that we saw. And Kareem, you'd mentioned earlier, like very conservative estimates of expectations of 10 to 20% of volumes and flows of what the Bitcoin ETF saw. Day one was phenomenal. And in first week alone, we saw 34.61% of the total volume that the Bitcoin ETFs saw. And I think this really exceeded everyone's expectations in terms of trading volume here. So very encouraged by this. And if this continues, I think we'll be in a very good place with these ETFs.
Absolutely. It's going to be an exciting few months. So the other thing we wanted to talk about was to essentially try to assess the impact of the ETFs on the underlying asset itself. So if you guys were around for our analyst call after the holding, we showed you guys a similar chart. This was around in May. But as you guys can see from here, like ETFs were able to absorb more than 280,000 Bitcoin so far. If we are to compare this with the cumulative issued units of Bitcoin since the approval of the ETFs, we can see that ETFs were actually able to absorb 150% of the total new issued supply. This is a force to be reckoned with. And again, bear in mind that there was a lot of speculative activity once the ETFs launched in terms of Bitcoin, but the asset itself is still going to undergo a lot of developments and a lot of exciting revelations to happen over the next few months, which should skew the supply and demand dynamics even more. It's too early for us to replicate the same kind of chart for Ethereum, but obviously, if you guys are subscribers to our newsletter, and I hope that everyone here is, we're going to share more and more coverage and breakdown as such, just to show the kind of newly issued or the relationship and the balance between the newly ETH issued supply compared to the kind of ETH that is absorbed by the ETFs. However, I think the key message here is that, again, we have a new source of demand. We have a new source of demand because ETH is an exciting new product. It's not the same as Bitcoin. And I think we all have to remember this. We're still going to talk about why it's not the same product. But again, we just have to appreciate that both can coexist and both will serve completely distinctive and different purposes. So the other thing we wanted to just provide a refresher on was why should people be generally interested in investing via ETF instruments versus crypto native? And when we say crypto native here, we're talking really about centralized and decentralized exchanges, but for the purpose of simplification, we just thought of just categorizing it or compartmentalizing it into the two major categories. Michael, you've been in the ETF world for quite some time, so I think we can have this as a back and forth chatter between both worlds. Why do you think ETFs are something that investors should be looking into? What are the pros of ETFs?
Yeah, no, absolutely. I think a big thing to highlight here is one, obviously they're professionally managed products. The people that are working on these on a daily basis and overseeing these have been doing this for quite some time, as you mentioned. I think another piece to highlight here is on the custody aspect of this. I think what's highlighted here is that if you're holding crypto native assets, you can hold them in a non-custodial platform, or you're holding them in a non-segregated or hot environment. In the case of the ETFs, all of the ETFs are holding their assets with institutional grade cold storage. So assets are segregated, they're never commingled, and they're always held in deep cold storage, which is an extremely useful security mechanism to have, and is a big reason why these ETFs are so great.
Absolutely. Of course, this is not to dismiss crypto native infrastructure. When we say crypto native, we're talking more about decentralized exchanges, really, because that's ultimately the future. And that's really what the blockchain and crypto native industry is all about. But we're not there yet. There needs to be a lot more developments and improvements on the user experience and on the user awareness before we reach that point. But that doesn't dismiss or negate the fact that we believe there's going to be a convergence, much like ETFs in their current form or the evolution of many previous different instruments in the past. We believe there's going to be a convergence between ETFs and tokens, generally speaking. But as Michael has already highlighted, there are certainly caveats to investing via ETFs. And if we were to sum it down, heightened security and just the ease of mind and the ability that you're able to mix this with any other money market funds, any of your stocks, whatever it may be. It's all living under the same roof, and you really don't have to be jumping from one platform to the other. Whereas with some of the things like crypto native infrastructure, you're still dealing with a lot of smart contracts, which opens you to the risk of technological risks. Sometimes you don't really know who the market makers are, which is a severe counterparty risk that hasn't been resolved yet. But we are in the process of seeing new solutions come to address this. The fees is a serious point that should not be overlooked, because at the end of the day, there's a TER for any kind of a product that you buy via ETFs. Whereas when you're buying via decentralized exchanges, it really depends on the network that you're using. The fees for buying assets on exchanges on Ethereum are going to be significantly different from ones that you are buying on networks like Solana. And of course, that's not the most satisfying user experience. But again, that's the beauty of interacting with a new technology and living through the different evolutionary stages that the industry will go through before we reach that stage. And I think we can jump on to the next slide, Lena. Okay. So we were just talking about this. Both products are not cannibalizing each other's market share. That's really not the case. So why do we say that, Lena, from your perspective? Why do you think they can coexist and they can complement each other, their portfolio?
Absolutely. No, it's because one serves as a true store of value, a true decentralized store of value, and has a completely different set of properties than Ethereum. Has a clear vision, digital gold. And I think there is no easier way of defining that. Ethereum has a completely different vision, and it has positioned itself from the start as a global app store. So it's not digital gold, but it could be called digital oil as it fuels the apps built on it. So yeah, it wears many hats. It doesn't have one clear vision, but it has a set of visions that combines them all. And that's the beauty of Ethereum. The reason why they can coexist with each other is why you, in a portfolio, why you own gold and why you own, for example, Apple or Google. They both complement each other, as you said. They're not very correlated right now. There is some sort of decoupling that's happening. And there are so many innovations that Bitcoin is actually catching up on with Ethereum. And as we've mentioned in our earlier analyst calls, and one key innovation that we are still going to see how it's going to evolve, but it's already transforming the traditional finance, is tokenization. And that's something we're really betting on in 2025.
Absolutely. I could not have put it better. I think if we are to give a punchy one-liner for what Ethereum is, it's a buffet of possibilities. It serves so many different purposes. And it's not distinctively limited by a specific function. It's the ability to serve as a coordination and as a settlement layer for so many things that makes it absolutely powerful. And we have to remember that the internet was never really purposefully built to serve the financial system, whereas Ethereum is. Ethereum is the evolution of the backbone of the internet. And as Lena highlighted, they both complement each other, which is why we should be unequivocally excited about the fact that there are two regulated investment products that gets us exposure to both underlyings. Now that we have the ETF, where do we go from here? What should we keep an eye out for? What should get us excited in the next few months? There are a variety of things, but let's break them down one by one. The main thing that we don't really still know when exactly is the time for the upcoming Ethereum upgrade. It was expected to happen at the end of Q3, then it was shifted to the end of Q4. And there is a possibility now that it might happen at the beginning of Q1 of next year. The Pectra upgrade, which is the name of the upcoming Ethereum software upgrade, it's the most comprehensive and the biggest upgrade that the network has or will undergo. There are so many different features that revolve around gas optimizations, that revolve around how the network should be a little bit more simplified for the developer. But we're not going to talk about them because this requires a call of its own. However, there is a certain key feature that I think everyone here should be significantly excited about, and that is called account abstraction. So what is account abstraction? Account abstraction is essentially, so if for anyone who has interacted with the on-chain world, there's a wallet like MetaMask. MetaMask, you can think of it as a really dumb wallet. It's not a smart wallet at all. You have to give it very specific instructions in terms of the kind of activities and in terms of the kind of things you want to do with your assets. That's cool for anyone who is quite sophisticated and has been around for quite some time. However, if we are thinking about onboarding the next million or 50 or 100 million users, people who should not, to be fair, aware of the complexities of crypto or aware of the need to bridge from one network to the other, or the fact that you need a native currency in order to pay for your gas fees, that's exactly what this upgrade enables. So with account abstraction, you are effectively transforming your sophisticated wallet into a more user intuitive kind of a wallet. This should resemble and it should resonate with the kind of accounts that you see in fintech platforms. If you're dealing with Robinhood or if you're dealing with, again, any of the platforms that allow you to trade stocks freely online, that's the kind of user experience that you would get. So what would it include? I've already mentioned, rather than creating a new wallet and having to write the seed phrase somewhere, which is a long 24 character term that you need to essentially import in order to activate your wallet. In the paradigm of account abstraction, you can just create a wallet with your Google ID or with your Face ID. If you lose that seed phrase, you can still recover your account using those exact same Web2 credentials. Another thing is you don't really need ETH to pay for the transaction fees. In the back end, this will still be the case because at the end of the day, Ethereum needs ETH. It needs the fuel in order to operate. However, for you as a user, this shouldn't really be the case. So if someone has some stable coins in their wallet, they can pay with that, and then the conversion happens in the back end. So it essentially abstracts away the complexity for you. In other cases, think of it if you're playing an on-chain game, you can't really be bothered with approving transactions for each and every event that happens within the game. In that regard, you could have a feature like gasless transactions, where essentially the application or the business behind this protocol or behind this application, they could sponsor transactions on your behalf. And you can approve a set of transactions ahead of time so that you don't really have to, again, keep approving and paying for each and every transaction. All of these things really seem quite intuitive, but they're not the kind of user-friendly features that we are quite familiar with in crypto. And that's quite a side. That's quite an exciting level to be looking forward to. So the chart that you guys are seeing in front of you, it shows that account abstraction is actually, it's been taking its place on a bunch of other chains, mainly Coinbase. I think we might know, we haven't highlighted this, but Coinbase, for instance, about a month ago, they launched something called the Coinbase Smart Wallet, which is essentially the realization of this vision that we're talking about. However, the only difference is that the Coinbase Smart Wallet is mainly operating on the Base network, which is the Coinbase Ethereum scaling solution, and it operates on a bunch of different networks. However, it's not really doable or it's not really applicable on Ethereum because the network itself doesn't support this kind of functionality yet. However, again, as you can see from here, we're really starting to see the surge and the explosion of this new trend, and we think that this will absolutely be a key item that onboards the next cohort of users without really expecting them to know anything about the unnecessary complexity of crypto. If we can go to the next slide, Lena, please.
Yeah, I just wanted to add that I think it comes at the right time, don't you think?
I couldn't agree more. Yes, people are going to, with the ETH ETF approval, people will be more inclined to to be curious about, okay, so you keep saying this global app store. So what are the kind of applications that live on this layer? And the key gateway to interacting with this on-chain economy is your wallet. So I think it really could not have, yeah, to your point, could not have arrived at a at a better
Better time.
time. And Michael, actually, let's ask Michael about this. Michael, I wouldn't say you're a newcomer, but from an outsider's perspective to a certain extent, what do you think of this kind of user renovation?
Yeah, having spent 2.5 years of my career at Coinbase before this, I think this was a major focus on making the user experience as friendly as possible. I think anything that you can do to take away from having to actually interact on chain from the end user, and while still using all of the blockchain technology, is how you're going to scale this to the next billion people. So looking forward to this upgrade and can't wait to see what's next.
Amazing. So obviously, Ethereum here is not the only smart contract platform. There are tons and tons of smart contract platforms out there, but there's definitely a lot of strengths for Ethereum as a platform. If we're really trying to be realistic and practical, I think the biggest competitor out there right now is Solana. But again, much like we were saying that there is a place for both Bitcoin and Ethereum to exist in your portfolio, we cannot really dismiss the fact that Ethereum and Solana will most definitely coexist in the future. We don't know for certainty, but we do know, just based on the kind of accelerating adoption and the increasing mind share in terms of developers or in terms of traditional financial institutions, that at least those two platforms will remain relevant for the foreseeable future. If we are to, and maybe before I even get into this point, don't you guys think that the future will be multi-chain? Don't you guys think that there's not going to be a single network? Like there's not going to be, we already saw that with phones. So what makes you, what would be the counter thesis to just the same thing as having a bunch of different infrastructures for a variety of mobile phones? Why would this not be the case for the internet native economy? What do you think about this, Michael or Lena?
I can start. I think from my very humble perspective, I think it's because the future will be multi-chain, because I think we have entered the era of maximalism a long time ago. And there is a plethora of use cases on Ethereum and Solana that are similar to each other, but there are other use cases or other applications on Solana that are completely different. And I think from a user perspective, why should I shy away from using Ethereum when I already have money on Solana? It's a perfectly safe investment strategy, as just to diversify where my money is. And I think that's the beauty of crypto, really, is to just decentralize everything as possible,
Including your wealth.
including my wealth. Exactly.
Okay, so just so that everyone is aware here, that there's just some cool data points to have perspective. Ethereum is obviously the most decentralized network by the virtue of the fact that it's been around for 9 years. Happy birthday, Ethereum, by the way. Yesterday was its 9th birthday. So that means obviously that it has the highest number of validators contributing to its security and processing transactions on top of the network. And it also means that it has the largest ecosystem of applications spanning across gaming and whatnot. But this also means that it has the deepest liquidity, because liquidity is where users and applications are. And obviously on the back of that, because of its decentralization, it's been the ideal platform for tokenization. However, on Solana, we think Solana is actually more suitable for high frequency type of financial applications. At the end of the day, even though Ethereum is a much superior improvement towards the legacy systems that we're used to in TradFi, 12 seconds to finalize a transaction is still quite a long time. So we need the highest transaction throughput that Solana has, which is settling transactions under half a second. However, something else that is really cool to see in terms of Solana's ascent has been extensions. Extensions is one of the recent adapters that the network implemented in order to essentially create a compliant and a regulatory type of a modular framework that allows companies to create a permissioned application. So what do I mean by that? It means that if you want a specific list of addresses, for instance, to interact with your tokenized asset, then this is doable through the tokens extension. There's a lot of benefits that come out of this application, but what's been really exciting to see was the fact that Franklin and Templeton, this just happened a week ago or a week and a half ago. They just launched their first tokenized. This was actually the first tokenized product outside of stablecoins, and Franklin and Templeton was the one leading the charge on this. This happened 2 weeks ago, and we just saw another product by Reverend Howard and Hamilton Lane, where they launched a tokenized private fund, which is it's really exciting to see that there is more happening outside the government tokenized government securities, which has been the chatter really for the past year and a half. But again, it's just wonderful to see that Solana is now being seriously considered for the tokenization landscape, for the tokenization experiments. And it's quite, yeah, it's quite a sight to hold. I think we can go to the next slide. Ethereum's V recovery. So what we're seeing here really is the fact that Ethereum's on-chain volume just surged on the back of the ETF approval. This, of course, means that there was a lot of speculative activity, but it also symbolizes the fact that there is more legitimacy and more credibility to the on-chain ecosystem that is built on the back of Ethereum. And why is this important? At the end of the day, one of the things that ETH is unique and well known for is the fact that it is one of the few deflationary assets within crypto and outside of crypto, really, to be honest. And deflation happens when there is a lot of volume that is taking place on top of the network. So that is exactly the kind of thing that we want to see if we want Ethereum to remain deflationary. And as I will show you in the next slide, it essentially means that it's able to be viewed as undervalued. When you look at this chart, it shows you the price to cash flow ratio. For simplistic purposes, a high price to flow ratio means that the network is overvalued, because it essentially means that the validators, the ones, again, earning yield on the back of supporting the network, that they're not earning as much money compared to the price of, in relative comparison to the price of Ethereum. Whereas a low price to flow ratio means that the network is undervalued, because it essentially means that the cash flows coming back to validators is at quite a high level, which means that, again, the network is quite undervalued. So why is all of this important? This composes or constitutes one key element of how we view Ethereum's intrinsic valuation. If we are to expect how we should look and anticipate Ethereum to be in our portfolio, then I think, again, with this ETF approval and with the fact that more attention will be diverted to the on-chain economy, whether it's DeFi or whether it's any of the other sectors, then we can expect revenue to increase, we can expect fees to increase, and we can expect cash flows to increase, which will ultimately benefit Ethereum's valuation over the medium to long term. Okay, so just as the last bit here, to when it comes to looking at Ethereum, aside from the last few months where the on-chain activity was really slightly muted, it's really quite impressive to compare Ethereum's revenue compared to other settlement platforms like MasterCard or PayPal or Visa. First of all, it's at least in 2022, Ethereum was actually almost outpacing MasterCard settlement volume. This is not a small feat. This is really a huge undertaking, but it's mainly for one of the reasons that we were talking about. MasterCard is a settlement layer for the financial industry, whereas Ethereum is not just limited to the financial industry. Ethereum is a settlement platform to so many different sectors and to so many different use cases on top of the network. And the fact that Ethereum is able to reach this kind of figure within just 3 years, really, of being a settlement platform, because Ethereum has been around for 9 years, but we really haven't seen the on-chain economy grow and thrive up until maybe mid-2020. So this is, again, really quite impressive to see. And it confirms and it echoes our thesis that Ethereum should really be viewed as a software as a service platform. Anyone can use it freely without any restrictions to create any sort of application. But again, it also shows that you should not underestimate the crypto native economy. Because if we look at the chart, for instance, on the left side, we can see that Ethereum was able to beat Meta's revenue on a yearly basis over the last 3 years, which is, again, super impressive to be seeing. Do you have anything else to add here, Lena or Michael?
No, I'm just as impressed as the audience.
Any thoughts you would like to share, Michael?
No, I think kind of everything that's going on chain is, and the interest that it's drawn from these same payment partners that are listed here is a testament to the technology and kind of its continued growth and where it's going to go next.
Absolutely. It becomes painful sometimes to really comprehend the kind of bullishness that we have for the industry over the medium term. Your chest gets pains sometimes. So just to keep it really sweet and short, we have an entire report on portfolio allocation and how should people treat Ethereum and Bitcoin in their portfolios. But again, just as a reminder here, when you have a portfolio that is composed of 5% Bitcoin and 1% Ethereum, and you balance it on a quarterly basis, you can see that the Sharpie and the Sortiner ratio are almost at the highest point. So this is really something that, again, should be truly appreciated about how big of a difference adding both assets while having the least amount of rebalances, the kind of impact that it has on your portfolio. When we send out the recording as well as the presentation, we will send our portfolio allocation report as well, so that you guys can take a deeper look and just let us know if you have any further questions really about the topic. So let's give a conclusion just to ensure that everyone has not been overwhelmed by the amount of information that we've shared here. What do you think some of the the tailwinds or for the next few months, in terms of macro at least? What do you think is going to happen?
Yeah, I think the biggest tailwind is rate cuts, and that's not only for cryptos, for the broader market. I think we've been thirsty for a rate cut for quite some time. We've been in a high interest rate environment for a very significant time. And just a few days ago, we knew that the national debt in the US climbed to $35 trillion for the first time ever. So I think there are more things to think about for the Feds to see whether they should cut the rates or not. It's not about taming inflation anymore. It's more about saving the US from debt and easing market conditions. I think that's the main tailwind. And the CME watch tool has predicted that there is a 90% probability that might happen in September. That probability keeps on decreasing. It has been increasing for the past month. People are also worried that it might take longer as to wait for the new US president, basically. But yeah, I think that's the main tailwind that everyone is looking forward to.
I think in terms of the other thing that will be on everyone's mind is the impact of crypto within US politics. The conversation has really changed. As Lena has already alluded to, we had the Nashville conference last week, where we saw for the first time that Bitcoin is being as much as sweet talk and as much as politicians really give a lot of promises before elections in order to get elected. The fact that Bitcoin has evolved or has elevated into the mainstream conversation and chatter, that it is being seriously looked at as a way to, for instance, the US debt crisis, I think that speaks volume. And it speaks of the fact that this is not a niche anymore, that there's really a lot of value that can be extracted out of it. So I think that's pretty cool to see. And we already, again, saw with Trump how he is suggesting that he would create a national stockpile of Bitcoin, that he wouldn't sell any of the Bitcoins that the government has acquired over the last few years. And we saw with Senator Cynthia that she's introducing a legislation that would essentially mean that the government would hold up to, how much was it again in terms of US dollars? Which is, again, it's pretty cool, but whether or not it will pass through Congress, that's a whole other conversation. But again, it's being inserted into the mainstream dialogue, and that's really the most important thing. We've already said.
And I can add that they're not just saying that because they like Satoshi Nakamoto. They're saying that because Bitcoin has been proven that it is a real store of value, and that's because of its scarce, hard-coded fixed supply. And that's where this belief comes from, that now they want the Federal Reserve to even rethink the volume they have holding in gold and to hold Bitcoin and even increase their Bitcoin on different time intervals to manage the monetary supply. I think even if it's not going to materialize, even if it's just talk, even if it's just going to be another bill in the drawers, I think the emergence of Bitcoin in this conversation speaks a lot of volume about the influence it has in the market and the fundamentals that it has in the back end. It's pretty cool to see that. It's a good time to be alive.
Absolutely. And of course, we've already talking about tokenization. I think it will play a key part in attracting more and more attention to the underlying infrastructure, such as Ethereum and now Solana, with Solana, playing a bigger part. And aside from tokenization, of course, we've already highlighted this. There's an entire app store of applications living on top of Ethereum. So I think more and more attention will be directed towards this. And we think that DeFi 1.0 protocols will be the biggest beneficiaries coming out of this, but we will talk more about this data point in the next section. Cool. So finally, we're just going to give a brief market update just because there's really a lot that is happening outside the Bitcoin and Ethereum ecosystems. Yeah, I think we can get right into it. What are some of the headwinds that we've seen, Lena?
Yeah, so that is a chart that shows you the price performance of Bitcoin over the past 2 months, where we've seen a lot of headwinds, as Karim said. So the German government has seized some Bitcoin from a website called Movies 2K. It's a streaming website, piracy. And they decided to start offload or selling their Bitcoins. Oh, they're almost $3 billion worth of Bitcoin, starting June 19th until July 12th. And as we can see here in this chart, we saw that Bitcoin in between June 19th and July 12th has dipped a little higher than 10%. Right after that, we saw that Mongox, if you guys remember, the very old Tokyo-based exchange that has recently also finally settled on a repayment plan to its creditors. If you guys don't know, Mongox got hacked several years ago, like in the early days of Bitcoin. I think Bitcoin was only $3 or something. And now they are transferring their recovered Bitcoin to 5 exchanges. And these 5 exchanges are required to send to creditors over the next 60 days. So on July 16, they transferred almost also $3 billion worth of Bitcoin to a Bitstamp operational wallet. I think Bitcoin has been quite resilient, honestly. It didn't dip much, only 1% overnight. But the biggest dip, I think, was on July 29th, when the US government surprised us all and transferred $2 billion worth of Bitcoin to an unidentified wallet. That is precisely what happened with the price drop that we've seen a few days ago. There are more headwinds and tailwinds that are going to happen over the next few months. Most importantly is the FTX settlement that is still pending approval. So we have 2 important dates next month in August, 6th and 16th. So 6th is the settlement hearing where the judge will approve or not of the settlement plan. It's almost $13 billion in cash to the creditors. However, these creditors, of course, do not like that they will have their money in cash. So they decided to vote on whether to have it in kind as like their own crypto or not. That is a tailwind if it's the cash, of course. That will mean that these crypto enthusiastic creditors or users will probably use that money to re-enter the market. However, we will see how things go on August 16th. There are other tailwinds, of course, with the macroeconomic improvements. We've seen some improvements in terms of inflationary indicators like the PCE, for example. And these should all make the Federal Reserve a little bit confident. The last thing that Jeremy Powell said, that still not enough, that it is getting better, but still not enough, still not quite enough to be confident as to start cutting rates. But we are also seeing that the market is breathing a little. the numbers are a lot better than what we've witnessed maybe earlier in the fall and spring.
Amazing. We're going a bit over time, Lena, so we're going to try to be as speedy as possible with the next two slides. I thought that this was just really cool to show to everyone. For the most part, I think we've seen the utilization of Ethereum and other smart contract platforms within DeFi, whether that's in tokenization or whether that's in terms of improving cross settlements or anything related to finance related, really. But for the first time, we're seeing Ethereum as a settlement and as a coordination layer for the automotive industry. I think that is really cool. It's a bit futuristic when you think that, according to Toyota's plan. So what we're seeing here is essentially Toyota considering tokenizing cars on the Ethereum blockchain. So what do I mean by that? That each car will essentially have its own account on the network. And why is that quite important? Because it means that cars will be able to integrate and connect with public infrastructure, whether that's getting more real-time data about traffic, whether that's getting more real-time data about the car status, sharing data directly with the manufacturer in order to spot things ahead of time, and so much more. However, again, this is really cool because, again, it shows that Ethereum as the settlement platform, it's so much bigger than finance. And we're probably we're seeing the tip of the iceberg with what smart contract platforms, generally speaking, are capable of. And again, it shows all of those movies that we saw 20 years ago. We're almost there now. The other thing we wanted to show was DeFi. So what do you think happened here, Lena? What's worth observing here?
Yeah, sure. It's worth observing that we had a few months of calm in the market in terms of in DeFi, but we're seeing the numbers are picking up. That is the migration or the volume, the traded volume on decentralized exchanges in comparison to their centralized counterparts. And we have to note that here that, as we've alluded earlier in this presentation, that decentralized exchanges have one key feature that centralized exchanges do not have, which is the non-custodial infrastructure. That is something that we are always in favor of because, or the community is in favor of because it's more secure. It will encourage more people to have their own money rather than just having it lying around in an unknown app. This is good, really good for DeFi, and especially with the ETF, as more people now are interested in Ethereum, now they will also be more interested to know what's happening in Ethereum. And as we know, DeFi is the biggest and the first, that's the pioneer use case on Ethereum. And we think that the best beneficiaries out of this trend would be the DeFi applications that have been around for quite some time. They've been battle tested. They know how to attract their audience or their users. So they will know how to absorb this newcomer experience from traditional finance. And I think we're betting on several players, but namely, they could be Uniswap and MakerDAO.
Absolutely. Thank you, Lena. And then the last thought was really just about Solana. Again, we've already highlighted that Solana has been at the forefront. It's been one of the fastest growing networks, I think, over the last 2 years after everyone discounted it after FTX. However, we've seen that Solana was being integrated with Shopify, with Visa for a lot of payment experimentations. Then we saw, like almost 2 months ago, that PayPal integrated their stablecoin on top of the network, and it grew quite significantly within a really short period of time. And most recently, as we've already alluded to, we're seeing two major TradFi institutions experiment with tokenization initiatives on top of Solana. So if we are to make a comparison, Solana is going through what Ethereum already experienced about 4 years ago, the early stage growth, where a lot of companies and real businesses are truly really considering it for their businesses. I think it's quite a sight to behold. And in terms of valuation, of course, that means that there's probably more room for growth for Solana, because this means that it's able to onboard more users. It's able to generate more revenue because of the plurality and the diversity of applications that the network is supporting. And even if you are to compare it to Ethereum, Solana is actually outpacing Ethereum on multiple metrics. like whether it's DEX volume, whether it's accrued revenue. Yeah, this is truly quite exciting to see, and it makes us very, very much looking forward to the competition that the two largest smart contract platforms will have in the next few months. And I think we already went way over time, but I hope this was helpful and beneficial to everyone. I hope it was insightful. And please, if we still have, I think, a few more minutes. So if anyone has any questions, please feel free to share them with us. If you don't have any questions, I think we can share our Twitter and our emails and the email that you already guys get. If you think of anything else later on, please feel free to reach out to us. We're nerds, but we love getting into the weeds of some of these conversations that we have just had. I think we did a really well job that we don't have any questions.
I do hope so.
Michael, do you have any questions for us since this is your first time joining us in this research?
No, this was great. Thank you so much for having me on the call today. And yeah, if anyone in the audience has questions, I'm happy to answer them as well.
I think we're going to have you as a guest more and more from this point forward. I think this was enjoyable.
Awesome. I'm happy to join anytime.
Okay, if that is it, we hope you have a wonderful rest of the day or evening or morning. And yeah, let us know, please. Let us know if you have any questions about anything. Thank you, guys.
Thank you. Bye, guys. Have a great week.